Good morning, guys. Welcome back from a shortened week. Thanks to US July 4th, Independence Day. Market's starting to get busy again. Fed minutes came out. Everybody noted in the minutes that whilst they all agreed to not raise rates, they all agreed that inflation is far from controlled and far from their target of 2%. So they expect 2 more rate rises this year to try and combat that. And that sent stocks a little lower and bonds a little higher. The biggest move I'm looking at is the 10-year bond, which we saw accelerate overnight. And I wrote about this earlier in the week, that this is where you'll see, I guess, the catalyst for a recession, because the 2 years are not far behind the Fed fund rate of 5.25 and has been rallying hard, but the 10 years have not. And if interest rates are going to be higher and higher for longer, then the 10-year needs to catch up and be in the mid-4s, so back up towards these highs. And when that happens, I think you'll see the US economy start to weaken considerably, because at the moment it's not. So that's about the only move. And on the back of that, we see US dollar strengthen and stocks weaken, as you would expect. Well, stocks are pretty much sideways, but to the downside. But you'd expect that to happen as people start to consider that risk. And we see VIX is also starting to rally, which is the fear indicator, the protection indicator. So all in all, it's as expected with the US dollar rallying. We said that was going to be the case, and we're looking for that to rotate back up towards the 105s, which would put the Aussie back down into the 65, certainly retesting that 66 handle, and euro dollar also lower, as we can see there, significantly weaker, back towards a bit of a minor support level. And I'd expect that to be tested over the next couple of days, the next few sessions, and maybe start to look for it into the 106s, 105s. Pound also a little bit weaker, more sideways, but it's certainly not getting that lift that the technical picture showed. And as I wrote on the weekend, technically the pound looks stronger, but fundamentally there's no reason for it. So I was in a quandary as to whether or not to be going with the technical picture. I also said that if in doubt, stay the hell out, and that's been the best advice so far, because it's just gone nowhere, and I don't see it lifting from here. I think it's more something to fade or sell. Dollar yen, we've got that line in the sand from the BOJ, and that's holding at the moment, which is 145. I dare say we're going to see a lot more sideways action as the US dollar strengthens, and the BOJ defends that 145. So we'll see this more of a range bound rather than trending. Can't see the US dollar weakening significantly, and bringing this pair back down to the 140s, but unless the BOJ gets serious about defending that 145 and actively selling the yen, buying the yen higher, and this pair coming off. But I think it'll be a tricky one, more sideways action than anything else. And that's about it, guys. We'll catch you tomorrow. Trade accordingly.